you pay your Colorado taxes, you can get some sort of credits. There's credits for this, there's credits for that. Who's really paying for it? Let's find out. It's Tim Hoover from the Colorado Fiscal Institute. Glad to have you with us.
Thanks for having us, John.
All right, first of all right, former Denver Post reporter, now finding work elsewhere. Miss the Post?
Yes, sometimes I do miss the Post. I still have many friends there that I keep up with, and I had a lot of fun when I was working for the Post.
Well, you're on the editorial board for the last few years.
I was on the editorial board for less than a year,
Yeah.
the last year that I was there. And so
It's amazing because in the last year or so, it has gotten a lot better. So, hey, all right, let's talk about it. You're working for the Colorado Fiscal Institute.
Right.
Working on trying to find out where our credits are going. Give me a basic background. A tax credit is?
Right, so there's a whole class of things called tax expenditures, and they cost Colorado about a little over $2 billion a year. So what that means is there's tax credits, deductions, and exemptions. Okay, so for example, we don't tax bull semen. That is considered.
Why not?
Well, not merely because of virile.
Go ahead. I'm letting the jokes there. Just take it
I'll
away.
avoid that
Just
one.
go.
But it's considered a production type of item that you would use in agriculture, same way a lot of other things are. A different sort of seed, if you will.
Let me put it in English. Basically, those groups that have some good leverage down at the state capitol can find themselves to get certain tax advantages, either an exemption or a deduction and a credit. And let's go over what those differences are. A few years back, bull semen got one of these special treatment. Of all things, bull semen got it because that's important for Colorado.
Right, and I mean, there's some exemptions maybe make sense. So we exempt the sales tax on groceries. So we're not, that would be really a regressive tax on folks who can least afford to pay it. So some of them aren't absolutely horrible, but others of them are very, very, very narrow. Like, for example, the bull semen one, that's a classic example. Those are exemptions. There's also things called tax credits. So in other words, it's as if you get kind of a voucher for, on your income taxes to pay maybe it's a certain portion of it that you don't have to pay if you get this tax credit, and it's for all kinds of stuff.
And I'm always amazed how people don't understand the difference between a deduction, an exemption, and a credit.
Mm-hmm.
So basically, in order, if you have an exemption, that means
it's not taxed.
It's not taxed. If you get a deduction, it means you get to
subtract
that off
the value of
before you get taxed.
Mm-hmm, right.
So I was going to get taxed on $1,000, but I have a deduction for $500. So now I'm only getting taxed on the remaining $500.
That's right.
But a credit is a much more valuable thing, which says if I owe $1,000 in taxes and I have a credit, that comes right off the taxes. Not what I'm taxed on, it's actually what I end up paying. So a credit is very, very valuable.
And depending on the credit, it can carry forward. There are some states where you can actually sort of trade tax credits like commodities. I don't think we do that here in Colorado. But in all of these things, at the Colorado Fiscal Institute, we try to ask the questions, what public good is served through this tax credit or exemption or deduction? What public good is served, and has it been proven effective? So a lot of these tax credits go to companies, say you're a certain kind of company, an aerospace company or high-tech company, you might get a tax credit, say, for producing so many certain number of jobs that pay above the median wage, we'll say. The question then is, would those jobs have been created without the tax credit? Bless you.
Keep going.
I know you're allergic to the truth.
Yeah, I'm allergic to liberals. It's a problem.
So we just try to ask, can you really prove? And most of the time, the fiscal notes on the bills state flat out, there is no definitive way to say that this company would not have done this anyway. And that you're not just rewarding people for what they've already
Let me
done.
use the more impolite terms that I think you're dancing around, which is a lot of these exemptions, deductions, credits are really bits of corporate welfare that an organization or a constituency group has more leverage down in the capital, and so they're able to find a way to get their industry or their group a break. There's a tax credit, I believe, for buying a Prius. So if you buy an electric car, you get a tax credit. Now we can have this argument: is that good for Colorado?
Sure.
Is that bad for Colorado? One thing we can guarantee is it's really good for Toyota, and it's really good for the guy who wants to buy a Prius because now he's got $5,000 or $6,000 in his pocket,
Right.
buying it. So it changes behavior, and it messes with a marketplace.
Mm-hmm.
And where left and right might meet is to take a look at what are we really getting for these tax credits.
Well, I think at the very least where different ends of the political spectrum meet is to say all of this should be open and disclosed. Okay, we should know how much the state spends on this and where it's going, because I mean that's what these are in essence, is expenditures, and so we believe in measuring that. But we also want to ask the question, what public good is served? Some tax credits we support. We're not against, per se, the notion of using the tax code to incentivize reward behavior. So, for example, there's a child care tax credit that helps low-income folks keep working because it offsets some of the cost of their child care. There's a job training tax credit that's being proposed that it doesn't benefit any particular industry nor any particular company, but it helps train workers so that they can boost their earning power, and we think when that happens, that benefits the entire economy.
All right, then let's be more specific. Which tax credits or exemptions are you critical of?
We can give a couple.
I can tell you when I hear, bull semen gets a tax credit,
Right.
but vouchers or do things for kids' health care might not be. When I hear that Priuses get a tax credit, but kids getting a scholarship, if you want to give to a scholarship fund to help poor kids go to a better school, that's not a tax credit. Then I see who's got the power in the legislature. I will agree with you. There are certain things that even I will say this makes sense to have an exemption.
Right.
Food, I think that's
Sure.
that's a good exemption. Things to help kids in need, great. I think we can do that. It's when it gets very industry specific that my red flag goes up.
Well, and when it's not demonstrated at all that it's proven. I mean, simply a statement of affirmation from a CEO saying, "Yeah, I wouldn't have done this if it hadn't been for this tax credit." I mean, that's just not good enough.
Because there's this if not for.
A but for, they call
but
it.
for,
Yeah.
which is a terrible way to put it. A but for.
Right.
Does it have a but for? And what that means is, I wouldn't have done this economic activity but for the tax credit.
tax credit or incentive,
But for
yeah.
this bit of corporate welfare. Otherwise, what? I wouldn't have bought the Prius? I don't know. I wouldn't have produced bull semen? No, I don't buy that. And what are some of the other ones?
Well, so for this current session, there's a sort of a perennial proposal out there. It's very popular in a number of other states, and it tends to be unpopular with economists on both the left and the right. And this is a sales tax holiday on back-to-school items. It's real popular with the public. Politicians have, rolled this one out in a lot of states, and it tends to get generally positive press coverage. And then occasionally you get a reporter that digs a little bit more and they discover that there's a lot of literature on how they are not particularly effective.
Effective towards what goal?
So the idea is
when
that
you say, is it good for Colorado, and your institute's going to take a look at that, well, that is all in the eyes of the beholder. If you're the guy selling pencils, you're going to love this tax increase. If you're a single parent and you got to buy pencils, you might love that tax credit or that exemption. But if you're measuring it on does it help kids? I don't know. If measured on employment or economic activity, those are two very difficult things to really measure.
Right, and we try to look at it through several lenses. But so, for example, let's just take the retailers. the argument is that they reap the benefits of all these people coming in on a particular weekend. It's usually one weekend, maybe it's 2 weekends around, August, let's say, where people come in and shop, buy, and it applies to your typical school supplies. Occasionally they apply these to computer goods and peripherals, clothing sometimes. The idea is that the retailers, it gives them a little boost in the arm. Well, this assumes that people buy stuff they otherwise wouldn't have purchased. And so the question is, are they buying more back to school stuff than they otherwise would have?
So to use the same but for,
right.
The question is, I wouldn't have bought those pencils for my kid to go to school but for the lower taxes, the tax holiday. And the question is, probably, yeah, I think I probably would have bought him the pencils, whether I got...
or do you buy 4 packs of pencils instead of 2? Do you buy 3 backpacks instead of 2? I mean, we tend to not believe that, and there's studies that show that it instead of it really just sort of telescopes the purchases into a shortened period, purchases that otherwise might have occurred. Also, it doesn't necessarily mean that everybody can benefit from it, because sometimes poorer families can't do these huge lump sum purchases anyway. You might have to shell out a couple $100s on back to school purchases to begin with, and if it's all one weekend, well, they still can't do it. They still can't benefit from it. So there's that. So does it really help retailers? Are they selling more? There's evidence to indicate that it doesn't. What about consumers? There have been studies that indicate that in some cases, retailers either don't offer the discounts that they otherwise would have, because they've got it now psychologically, everybody knows, hey, this is the sale, this is the no tax weekend, that's when I'll go shop. Would you discount your products then? Or in some cases, they may even raise the prices. There's been studies that have shown that with some retailers, the goods were cheaper the preceding week.
What you're telling me,
yes,
is what I already know, which is when people try to manipulate the marketplace, it just causes all these fake costs, and things get mixed around. It takes away from the true cost, and true cost is how consumers make their judgments. And when you hide those costs, that's where people make unhealthy decisions.
We believe, at least in this case, with that tax credit, proposed tax credit, it's not been proven, to help either retailers or consumers. It would be proven, though, to hurt the tax collecting entities your cities, your counties, the state, that use that revenue to turn around and provide services to our citizenry. And this is a criticism that the left and the right tend to agree upon.
All right.
That's one tax credit.
Have a minute left. Let's pull this together.
Yeah.
All right, so we have all these new tax credits. We have these old tax credits. Can left and right come together and say, let's get rid of some of this corporate welfare?
They can try. As you well know, it takes an enormous amount of willpower on the part of the legislature to get rid of some of these incentives and expenditures. I mean, they did that in 2010, and it was really hard.
Mr. Hoover, thank you. Thank you. Listen for me on KHOW Radio. Tell a friend, and we'll see you next week.